point, stocks were mixed. Treasury yields seem to have declined, and traders at this point assessing the risks to the economic outlook. Of course, there are, those suggestions that we might see an increase or a faster pace when it comes to monetary policy action. Everybody's waiting on that to see how that will actually play out. We are still waiting and taking a look at U.S. Key economic data as well as those Fed minutes. But as it stands right now, Asian markets, we did see the Nikkei in Japan falling about 1.5%. You may remember yesterday the Japanese markets were closed for a holiday. Broader Chinese markets at this particular stage closing the day a bit mixed on the day, with the Hang Seng Index in Hong Kong rising about 0.5%. But to talk to us about the various themes globally and how they're affecting some of our local markets, we are joined by Chantal Marks, who's from F&B Wealth and Investment. Chantal, thank you so much for your time. When you look at how our markets opened and also how our markets are faring, given the broader global picture and some of the concerns in the background, whether it's the COVID-19 cases rising in Europe or the prospect of increasing interest rates, how's our market handling all of this?
I think our market's handling it the way that most global markets are handling it. The market is super volatile. I mean, we have the market up the one day, down the next day, and it's almost as if the market is struggling to come to grips with what is actually going to happen. So when you look at currency markets and fixed income markets, for example, they reflect this fear, I reckon, a lot better. Whereas within the equity market, there's still kind of a push and pull between the global growth outlook being quite strong versus inflation going up and policy possibly tightening and derailing that growth versus very strong earnings numbers. So it's a bit of a push and pull at this point in time. Today, though, the local market is under pressure, and it's really very broad-based. I think there are some of the major miners that are eking out gains. Specifically, I'm thinking about BHP Billiton up quite nicely today on the back of higher iron ore prices and higher oil prices. But I mean, if you look at the top 10 stocks on the JSE, only BHP is in positive territory. The other 9 all trading lower today, and I think that it's probably true when you extend that to the top 40, top 100 and the JSE overall.
All right, so locally we did have some company news come up, but before we get to the results aspects of those news, we did get an announcement from ABSA saying that they've resolved to remove Sipho Pichane as director with immediate effect. Of course, he's responded saying that he's going to take the banking company to courts to contest his removal. The share price dropping 2%. To what extent does the market then pay attention to the boardroom squabbles that happen within any organization, let alone this one?
So the market doesn't like it. Investors do not like uncertainty. They don't like a board that is distracted by its own dramas instead of looking after the interests of shareholders within a broader organization. And that's why I think you're seeing this being reflected in the ABSA share price. I mean, this isn't the first boardroom drama that we've been dealing with from ABSA. It's probably the 3rd or 4th one in less than a year. What I do think, though, is that it's probably better that the board kind of tries to get itself to a more peaceful place. So, I mean, perhaps just distancing itself from Pichane isn't the worst thing in the world. But yeah, I mean, it's unfortunate, and I think that we still don't actually know what happened there, and it will probably be quite some time before we get to any sort of truth.
So in terms of company news, we had Tsogosan releasing their financials, talking about, rather warning of the slow recovery. Revenue seems to have tripled. What was your assessment of their financials?
Well, occupancies are still exceptionally low. This is a company that is very much geared towards strong international and business travel, as well as the conferencing market. And as we know, that really has not recovered at all. I mean, maybe recovered a tiny little bit, but we're not nearly at levels where we were prior to COVID-19. This company really requires a strong increase in international travel. And the management team mentioned that low vaccination rates in South Africa is is actually a bit of an impediment, because you won't necessarily get that international travel if it's not deemed a safe place to come to. I mean, apart from all the other safety issues that we deal with as South Africans, COVID-19, I think, is just another one to add to that, which detracts from our attractiveness as a tourist destination. So a lot to contend with. I think they're doing quite well under these circumstances. They really are trying their best. They did make an EBITDA profit, which I think is quite commendable, given that their 6-month occupancy was 22%.
Right. So let's talk about this particular statement that I found quite interesting, coming out of the Wall Street Journal, making an assessment on Fed Chair Jerome Powell, saying that in his first term, he came across as dovish, giving priority to employment, especially when we dealt with an environment where inflation was non-existent. At this particular point, as he goes into his second term, he might have to do a reverse on that and prioritize inflation while also having to risk sacrificing jobs. I mean, do you see it that way as well?
Yeah, it's an unfortunate side effect of the cycle, I think. When you do get to a point where the necessity is there to not only start thinking about inflation, but also to build up a buffer for the next inevitable crisis within the US or global economy, it's very easy that to regard such a Fed chair in that particular set of circumstances as being quite hawkish. But I mean, I think it's just a terminology story, and it's just a side effect of where we are within this cycle. I do, however, think that within his core, not that I know him personally, Powell is a bit more careful. He's quite the dove, and I think that he would prioritize kind of an employment situation that is not, or a monetary policy framework that's not completely detrimental to the employment outlook in the US. So it's going to be a fine balancing act, but I think that comment is probably fair.
All right, Chantal, thank you so much for your time. That is Chantal Marks, who is from F&B Wealth and Investment. Thank you so much for tuning in. We're going to take a quick break.